Good morning and welcome to TA for Traders. It's Monday the 3rd of April. In this short video I'll be looking at the S&P and the Nikkei, both equity indices. What we'll be seeing is that technical analysts would be looking at the S&P slightly in a positive outlook, and on the Nikkei perhaps they'd be looking for a negative outlook. So here we are on the S&P to start, and why would a technical analyst be looking at this positively? I think what we can see is this is like a flag on the bull trend. We've got the 50-day moving average, which is the blue line, still very positive, moving up. It did give support at the start of last week. A little picture that I can see forming here as well is a potential reverse head and shoulders. So you've got the left shoulder here, you've got the head down here last week with the trading, and then it looks like we could be getting a right shoulder formation being created now. If that's confirmed, we'll get the 50-day catching up quite quickly towards the end of the week, and that could then give the push up into new high ground. But let's wait and see. Immediately, we're on the 20-day moving average, which is the yellow line hidden behind the last 3 days trading, and that is slightly negative, causing a bit of resistance. Right about on spot, but it's moving down, so slightly negative. Also, the RSI is slightly negative, although it has picked up over the last week. Here, it's quite neutral, 54.6. Around the 50, it's neutral. People look at the trend on the RSI, and you can see that it is still in a downtrend, so slightly negative. And the MACD as well, slightly negative, although turning there. But as I said, a technical analyst looking at this chart would be encouraged by the 50-day potential reverse head and shoulders, and would hope that after a few days consolidation we would get a push up. Looking at the longer term, this is a weekly chart, so each bar here represents 1 week's trading. Obviously, we're partly into today's trading, so there is a bar for this week. You can see the moving averages, the 20-day there, the yellow line, and the blue 50. These are 50-week and 20-week moving averages are positive. RSI did perhaps go a little high, showed overbought, is now unwound slightly, and the MACD just rolling, but still indicative of potential positive momentum. I mean, you can see the flag here, and it's not hard to guess that if we should have the flag and then another break upwards, perhaps when the 20-week catches up, that would give a push into new high ground. So slightly positive there. Looking at a shorter term perspective, and this is the 4-hour chart. So each bar here represents 4 hours. You can see the picture on the reverse head and shoulders that I was explaining on the daily. You can see that here quite as clearly on the 4 hourly. So you've got left shoulder, head, right shoulder. In fact, if anything, it's a bit more obvious here, and technical analysts will be looking at that and hoping if we get a push up in the market that would be a confirmation of this reverse head and shoulder, and then we could see perhaps 50 points upside. Moving averages here, we've got the 20-day, the 24-hour moving average on the spot. The red line is the 200 4-hour moving average. That's at spot as well. We've got the 50-day, the blue, the 50-hour 4-hour average rolling upwards. If anything, they're all slightly positive. RSI just drifting around the 55, still above 50, and the MAC just going sideways. Again, a slightly positive picture. So overall, the S&P is slightly positive. Looking at the support resistances, these are the key support resistances that you should be looking for on the daily. So the resistance is at 23.92, 24.02, and then the support on the 50-day 23.42 spot 32 and 23.21 spot 1. Okay, moving on to the Nikkei Index, and you can see here from the daily chart that it's range bound. I don't know if you've looked at the video that I did a couple of weeks ago on the Nikkei. I had a support line coming through and a resistance line on a triangulation pattern. We did slightly go above that on this rise here, and then we went slightly below it on the fall at the start of last week. But we're towards the lower boundary of this of the recent trend, and that's why a technical analyst looking at this would be slightly cautious. What would they be looking at? They'd be looking at the trend. They'd be slightly concerned that if this support doesn't hold, we could see further falls. Slightly concerned that the 20-day moving average, that yellow line's moving down, that the 50-day, even though it's moving up, has given little support and we're now below it, so that will start to roll. The RSI has dipped below the 50, starting to indicate that there's some negative momentum coming into the market, and the MACD as well are drifting down, again a sign that negative momentum. They won't trade on that until we see a break of these support levels. If those supports fail, the next support is quite a lot lower, around about the 17.2, 17.3 level, although there would be initial support from this 200-day moving average at 17.862. So slight concerns there. On the weekly, you can see the trend. You can see it's quite it's worked well. The upper boundary, lower boundary. We are towards the lower boundary. Also, we're below that 20-week moving average, which coincides roughly with the 50-day moving average. And you can see we're trading below it now. Again, the RSI's drifted, and again on the MACD, it's starting to flash a slight negative warning. So we're just slightly cautious on this Nikkei. And just to complete the picture, this is the 4-hourly chart, and here you can see that the 24-hour average has rolled down, will give resistance on the upside. The 50-day, we've gone below it, trading on it, and it's moving sideways. The RSI, again looking slightly negative in a downtrend. MACD slightly negative. So all three charts are actually slightly negative. On the support resistance levels for the Nikkei, you've got the resistance at the downtrending 20-day 19.302, and then any break 19.706, and then on the downside, if the supports don't hold, the support is 18.840. If that doesn't hold, the support below there is 18.663. But as I said, if that support doesn't hold, the market could actually drift down to the 200-day at 17.6 and then down to support at 17.2. Thank you very much for watching this TA for Traders on Monday, 3rd of April. I'll be back shortly with some more videos today. Thank you for watching. Remember that this technical advice is only my opinion and is not an investment recommendation. And please do read the disclaimer that's coming on the screen. Thank you.